After testing over 5 years of data, over 800 trades taken, I have found the two things that separate the failing order blocks, the ones that never hold, versus the winning order blocks, the ones that are reliable and consistent. And in this video, I'm going to reveal to you what those two things are and how you can consistently find order blocks that will hold. And as a bonus, at the end of this video, I'm going to share with you one simple hack that you can use that will double your risk to reward ratio and increase the likelihood of your order block working even more. So, as I said, over 5 years of data, verified data, over 800 trades taken in that time frame, 1,250 days of price action analyzed. The two things that separate winning order blocks from losing order blocks are as follows. I'm first going to share with you the theory of these two winning order blocks, and then I'm going to walk you through live examples so you can spot these order blocks in real time. The first winning order block is what I call the sweep shift. It's very, very simple to understand. Essentially, imagine you have price action that's trending in an upward direction. So we have a swing low down here, swing low, higher high, higher low, higher high. So we're bullish. And then we change character. We shift from bullish to bearish. Well, in this process, what you want to look for is the area of price where we sweep this old high here and then aggressively shift below this low down here. If you can find an order block at the high of this price leg, that is a high quality order block. From there, you can essentially expect price to have some kind of retracement into your order block, and there's a likelihood that this order block will hold, and you can trade from this order block and essentially just target the next weak swing low. So as you can see, we have a swing high up here. We put in a low, and then we put in a new higher high. Now we're coming for a pullback, right? It's over 3 candles, so it meets my criteria. Then you can see we break this high. So my current swing structure, this is my swing low, and we are still bullish, right? Note that this is Asia session high, so it's a highly liquid area of price. Then what we can see is that we aggressively break below this low. So what we have is a break of structure on the buy side, followed by a bearish change of character on the sell side. Then, as you can see, you want to identify the last area that caused the sweep and the shift. And in this instance is this final buy candle before the sell-off. This right here would be my order block of choice and an order block that I have consistently seen to work. And then essentially you can literally just place your entry off this order block level, and all you have to do is just target the next swing low. And this has a very high success rate. Now let's break down winning order block number 2. And this is what I call the continuation trap. Now, just before I break this down, I should let you know, if you want hands-on, step-by-step trading strategies that I've just shown you with over 5 years of data, every single trade recorded and analyzed, then below this video, I'll leave a link and you can apply to join our community. So the continuation trap, right? Very simple model again. What you can see here is we have bearish price delivery. So we have a high, we have a lower high, and a lower low, and then we shift bullish. So now at this point in time, my swing low is down here and my swing high is up here. But what you can see is as price starts to pull back into this area, we have some bearish internal structure, right? Internal low, internal lower high, lower low, lower high, and then lower low. At some point in time, if price is expected to trade above the high up here, which it is, then we need to wait for an internal change of character. That's the shift from bearish internal to bullish internal. When you get that, now what you need to see is a buildup of liquidity, right? Preferably some kind of Asia session, which you have seen by now I use a lot. If we have some formation of liquidity at an Asia session low and the order block that broke structure toward the buy side is below that level, it's a very, very good order block to trade from. Same thing again, you can just place your entry in here and you can literally target the next swing high in structure. And so here we're able to break down what that looks like. Again, remember where we've just came from, we were bearish, right? We're putting in lower lows, lower highs, lower lows. And then eventually, as you can see, we shifted to become bullish, right? So we have a swing low that is down here and we have a swing high that is up here. So as of right now, we're bullish. However, what happens is when price puts in this new high, we have a low, lower high, lower low. So we're internally bearish until eventually we shift this high internally and we break that structure. From here, what we can expect is that this high now is going to be traded through. And again, we can see that if this was our swing low and this was our swing high, where's the order block that caused this change of character? That is very simply this final sell to buy in this area. And guess what? It is also just below this Asia session low, which is a massive piece of liquidity. And it's the same thing again. You can literally just place your long position in here, put your stops below this level, and then you can target straight away this old swing high. And again, this is something that has consistently played out time and time again. Now that we understand order blocks a little bit better and how to identify ones that work, now I want to show you how to actually double your risk to reward ratio with one simple thing. So let's take a look at this. 30-minute time frame, we are obviously trending bearish. Our swing high is up here like this. We've had a break of structure. Right, our swing low is down here. It's very simple price action. So we know that this low down here is our actual target. We know that this is our protected high. We know that this is a good order block because it has taken previous New York session high plus previous London session high. So this area has taken a good level of liquidity. It has had an aggressive expansion to the sell side and given us a bearish break of structure. So we know then that this is a good order block. However, we don't want to just place our order on this level. I mean, you can in theory, but if we were to do this, let's say, our swing low target would be just a little under a 1-to-3 risk to reward ratio. That's not terrible, but you need a much higher hit rate. So what I like to do is instead of just taking a trade from this level, I actually want to wait for price to come into this level. And when we get there, I want to drop down to the 1-minute time frame. And I want to tune in to what's actually happening in this level. You see, not only am I going to double or even sometimes triple my risk to reward ratio, but I'm also going to add an extra level of confirmation on this order block to make sure that I've actually chosen the right order block. So this one thing alone has made me a ridiculous amount of money. You see, as price approaches this level, the 1-minute time frame tells a story. And that story is that right now, buyers are in control of this market. They are dominating the price and they are pushing price higher. So if I want to sell, which I do, it's a little bit premature to sell right now because instead of just having my order on here and my stop loss on here, I can essentially wait and refine my risk to reward ratio, the area that I get into the market. And how I can do that is by waiting for confirmation. Instead of trying to just short now when price could very easily just continue trading higher, and we don't know that this order block is guaranteed to hold. We just know it's got a good probability. Sometimes they don't. What I want to do is wait for that true confirmation with a market reversal. So price is bullish, as you can see. I need to simply just wait for price to become bearish like this, right? What we can see now is that we have actually broken this low. So we had a swing high, swing low, higher high, lower low. So now we're bearish. However, for me at this moment in time, my London session window has still not opened. So I do need to wait for my London session window to open. You can see here 155. So boom, there you go. Straight off the bat, that is my New York Open. So when I'm preparing for New York Open, London Open, sorry. I can already have my order in place. So how would I actually look at positioning this level? Well, 5-minute time frame and the most relevant fair value gap or order block. In this instance, we can see that we have this really nice bearish order block. So I want to just go ahead and literally just place my position on this level and my stop loss above this high. So what we can see here is if I was to use the 30-minute area, right, the level that we're looking at, if I zoom out, this is the order block that we're looking at. If I use this level and target down here, I get, let's say, a 1-to-3. If I use this level and target down here, I get a 1-to-7.2. So that's over double. And not only am I doubling my risk to reward ratio, but I'm also allowing price to show me what it's going to do. Instead of just gambling and hoping that this order block works, I'm actually letting the market prove to me that I am right before I need to risk any of my own money. That is the reality of having an edge. So when London session is gearing up to open, I can already set my order at this level. And London session opens with a tag into my position and an immediate retracement away from my position. And I can even be smarter. I can reduce risk in these moments, right? There's so many little subtle, small details that we can implement that enable us to get much better results than just these standard 1 to 3s. And again, like I said, if you want to learn from me and my team on how to truly become a profitable trader, all of the small details, I'll leave a link in the description and you can apply to work with us.